Hey everyone, hope you're doing well. It's July 3rd, so it's a bank holiday tomorrow, and today's closing early. Market's closing early, at least for the prop firm anyway. I'm trading this new model, entry models, and it's a 9:30 a.m. or 9:45 a.m., whatever. It's basically right around 9:30 a.m. is when you start looking for trades. So 9:30 to like 10:15. Anything after that, then you don't worry about. So I was kind of quasi forward testing this. I was only trading with 5 micros, so not. I mean, it's a decent size, but it's nothing overly risky. It's an evaluation phase account, 50K account. So these were my trades today. So we have this data high over here was NFP, so I'm not going to zoom way back and scroll back. Obviously, you get it pumped up. And so at 9:30 a.m. open, basically I'm looking at this as it taking that high. So in my mind, I'm looking for a reversal off of this sweep. And, you know, it's NFP, so it's a bit different, I guess, than a normal sweep, if you will. But anyway, that's what I had in my mind. So the way this works is I'm looking for fair value gaps to go either long or short. I'm kind of supposed to like try to be neutral as possible, but obviously we had this large displacement here. So we had this large bullish fair value gap. Another one was created right here, and but again, I was treating this as a sweep, so I wanted to go short. So in this way, I'm either looking for inverse fair value gaps or a fair value gap and then a retrace into it to go short. So basically, that's what I got. I got the first. So we had this initial fair value gap that got respected, but I didn't go long. Again, I'm looking for a short. So waited, created another fair value gap here, which this one obviously got inversed, and that's where I hopped in short right there for 20 points. So 1-to-1, 20 points. Um, and there was no specific entry model other than basically it candle closed, it pulled back a little bit, and I sold. That was it. No trickery, nothing special. That was it. And basically it's targeting this 15-minute fair value gap down here, this green box. And then second follow-up trade, I was still bearish. I was thinking that we were going to go take this low down here. That's kind of what I had in mind. Obviously, did not work out. It reversed immediately and stopped me out for 20 points. So basically, break even. And so when that happened, I switched my bias to bullish. And so we got this next fair value gap at 951. So the 950 macro is when that kicked off. No, I'm definitely going long, which I I didn't reduce my risk. I went 5 micros. I reduced my risk by dropping my position size. So I went 10-point stop loss, 10-point take profit, which it hit TP pretty quickly. And the entry model is, I'll show you what the entry model is. So let me turn this off here so it's easier to see. So displacement creates a fair value gap, wait for price to retrace into it. Better if it trades into it rather than just taps it. That's what I've noticed. So if it traded into it, it doesn't have to be 50% or anything like that. It just got to trade into it. And then what I'm doing is I'm looking for, I mean, it's just kind of hiding what I wanted to show. Then the entry model is once it trades into it, so like on this candle here, I'm looking for closes above the previous candle high. So obviously this candle did not close above this candle. So then you just move this down and then this candle got closed above. Obviously I was a little late. That's really where you get in. I did not, but that really was the entry right there. I did not. I got in a little late. I don't know how many points that is. Probably 2 points late, which, I guess is a lot if you're scalping. But anyway, stops at 10 points in this case, or the lows, and take profit 1-to-1, 10 points. That's the last trade it took. So anyway, hopefully that's helpful or interesting to you. I appreciate you watching. And it's Independence Day tomorrow, so enjoy your holiday and take care, everyone. Have a good one.